Hello, everyone. Thank you so much for joining us today on the Gold Silver Bitcoin Show, brought to you by the GoldSilverBitcoin.com store. We are more than honored to be sitting down today with Gregory Mannarino. Gregory is also known as the Robin Hood of Wall Street. He's had a storied career on Wall Street. Thank you so much, Gregory, for joining us today.
Great to be here. Thanks for having me.
So we've just lifted the debt ceiling. I'm curious, what implication does that have? How has that worked? Maybe what is the Federal Reserve? And then how should people react?
Well, look, I mean, I don't think it's a big surprise to anybody here that, oh, yet again, they're going to raise the debt ceiling. They're going to kick the can down the road. We're going to have to readdress this relatively soon. Imagine my utter shock here. Look, I mean, what does this whole thing boil down to? It's very, very simple. We're in a situation where without the continuous and relentless acquisition and adding on of more debt in perpetuity, we're just done. That's the nature of the beast here. It's a debt-based economic model, which means at its core, debt must be piled on at an ever-increasing amount just to maintain where we are. Most people have no idea that that's how the system works here, but that is a fact. The debt is never meant to be paid back. It's only meant to be expanded on exponentially. So, I mean, this is all nonsense here. It's a big show that, oh, we're really going to do something about it. No, it's all theater. And we have no representation here in the United States, or I think anywhere around the world. We're being ruled and governed by central banks, and their plan is to continue to inflate, period, the end. So understanding that at its core just makes our life simple. What we need to do, stay on the right side of that, and we can do this in many, many different ways. But that's what it comes down to here. The relentless acquisition of debt on an unprecedented scale in perpetuity, no matter what the Fed does, no matter what our so-called representatives do, that's the way it's going to continue. It's just, that's the way it is. It's the nature of the beast.
I was speaking with David Morgan recently, and he went so far as to say that if you can get your hands on some plywood, that might be a good idea. I don't know if you go that extreme, but like, when in 2008, the banks were bailed out and there was the crash, there was TARP, and then of course the global financial crisis, I became aware of gold and silver, especially silver as a potential hedge against inflation, just because as a young man, that's what drew my attention. And I think many young people before Bitcoin came onto the scene. So I spent 3 years in the gold and silver space, and a large swath of that retail customer base were worried about a lot of the inflation that we're seeing today. Then in 2012, I looked into Bitcoin, and Bitcoin is based in some ways, some argue, on Austrian economics. It's assuming increasing demand, a deflationary currency. There will only ever be 21 million Bitcoin. It says in the Bitcoin Genesis block, it references rather the bailouts in England at that time. And I think a lot of attention was sapped maybe from silver in particular into Bitcoin. But nonetheless, I'm wondering, do you see the same potential hedges today against inflation that is Bitcoin and the precious metals?
Absolutely. I talk about this all the time. Oh, 100%. Look, what are we really doing to break it down at its root cause? Understanding here that the debt is going to vastly inflate from where we are. It can't stop ever. So realizing that, we need to just do the opposite, take the opposite side of the equation. And to me, I've been telling everyone since literally I sat down and started talking to bet against this debt, become your own central bank. And initially, as you just said, the key components were get into physical assets, gold, silver, and then came cryptocurrencies. And it took a while for me, honestly, to come around to it and understand it. I'm an old school guy. I'm not young. So, but I think I have a very good handle on it now. And I've been telling people for a very, very long time to hedge yourself, keep yourself hedged against what is coming, because it's gonna implode. We're gonna get a debt market implosion on an unprecedented scale. People don't realize what's coming. It's gonna be by design, nothing by accident here. And you need to be in assets like gold and silver and Bitcoin and other big cryptocurrencies as well. Several of them. I don't think people should have all their cash in any one particular one. I happen to own all the big ones, honestly. I think most people who follow my work are well aware of that. I just started to build a new position in Dash. I happen to like Dash. I happen to know that some big players are buying this stuff. So I want to be on the same side as they are. But absolutely, this is what people need to do. Understanding the situation that debt is going to continue to inflate. There's no end in sight here. Something I've warned would happen since forever, that they can expect to see this, the inflation that we're seeing right now. And it should be no surprise to anyone. But I think people are frustrated looking at the price of precious metals, the price action, which has no bearing on reality. We have the world's largest bank by assets, rigging the market, pulling it any way they want to via the derivative. I mean, have you ever heard of such a bizarre situation where you have a hard asset deriving value from a derivative? It's upside down. Shouldn't be like this, but that's the way it is. And I always tell people, embrace it. Let them play their game. We're going to play our game. And the game really today still remains risk on, meaning cash is making its way into the equity market, and it's making its way back into cryptos quite obviously. I do believe we're going to see Bitcoin again at a new record high and way, way higher than that, and not too far off. So look, we're in a bunch of assets, all of us here that understand what's going on here, betting against the debt, becoming our own central bank, getting into this market as well, owning large cap dividend paying stocks. Let these companies pay you to own their stock. Market's going higher, market's going much higher. There's no doubt about it in my mind, as long as the debt keeps inflating, which it will. And as long as we keep our eye on the credit market and the debt market, we have a very good idea and window as to what we should be doing right now.
Do you have any comments on some of the Bitcoin or crypto mining stocks that are popping up? So there's and I'm not invested in any of these, like Core Scientific, Hive, and Hut 8, I believe, is another one. Do you think that this might be an option for people who maybe aren't comfortable taking their money out of the stock market? Or are there any other hedges in the stock market that people might consider?
Oh, Lord, there's so much. It's a huge question. With regard to miners here, Bitcoin miners, crypto miners, I personally would rather hold the actual asset itself than put to. I'm not saying that people shouldn't maybe look at these things here, but give them a real hard look and think about why they want to own a miner as opposed to the actual asset. And this goes for anything else. And I get the same question all the time with regard to, metals miners. Hey, Greg, what about this? What about that? If I had to choose between one or the other, I'm gonna want to hold the asset itself. No other real counterparty risk involved. So it's just it makes it more desirable for me. So at this point, I said I don't own any of that. I don't plan on it. I do plan on adding to, and I haven't done this in a while, honestly, adding to any of my crypto positions. I've been buying this stuff for a long time now. And I've been telling people to do the same. So I mean, if we got, for example, another major drop in cryptocurrencies, I would absolutely buy it. Actually, that's not true. I did buy more Bitcoin about maybe 2 months ago. I bought some more. I bought more Litecoin. I bought more Ethereum at that point. We were under a little pressure at that point. I said, hey, you know what? Might be a good opportunity. And if we drop again, well, yeah, I think it would be an opportunity to buy more. And the same thing for me goes with precious metals too. Let them play their game. We all know it's rigged. So good. Let them do that. And we're going to play our game too. And we're in these, look, I'm not trading this stuff. I don't trade cryptos. I do not trade precious metals. I am a holder of them. I am an owner of them. I do trade the equity market. I feel comfortable doing that. The other stuff is, to me, a hedge. It keeps me hedged and it lets me sleep at night a little more. When anybody is in any one asset here, of course there's going to be worry. Okay, but if you have yourself positioned in a way that you really don't care which way the market goes because you're still going to be all right, well, that helps you stay sane in an insane environment.
Have you ever looked into, like, for instance, silver mining stocks, which is a a minefield in so many ways? It's almost like, in some ways, the ICO days in crypto,
Yeah.
the way that some of these miners seem to be operating. But do you ever look into the silver mining stocks? And do you think that's a place where people might be able to hedge if they're not comfortable getting off the stock market?
I think they could do that, but for me, I don't do that. But I think it is a place that people could, uh, by doing a lot of research and understanding what they're getting into. Again, sure, you can invest in a lot of things, and people can put money to work in a lot of things, but most people have a finite amount of capital that they have. I have XYZ, and this is what I want to do with it. They should, diversify, absolutely, into different things. And if having, let's say, miners of any kind should be part of their portfolio, that's up to the individual. I'm not going to say they should go out and do it. I do not do this. I don't feel like I need to at this point. And again, too, for me, like, if I want to be paid to hold a stock of a company, I don't want to just own a stock just because I believe it's going to go higher. I want to be paid to hold it. So my core holdings, every one of them is a large cap company that pays a dividend. I want to be paid. I don't want to sit back and just, I think there's a value in a lot of assets that don't pay dividends, companies as well. And some of these are probably miners as well. But to me, like I said, I'm very simple. My strategy is exceedingly easy to follow. It's just right now in the present environment, owning core positions, which would be large cap companies that do pay a dividend. I trade around these things. In fact, if you go to my website, traderstrades.net, I have a whole slew of open trades. And some of these things I've been in and out of multiple times, setting up credit spreads and or selling options onto the market. I am a net seller now. I kind of changed my whole strategy around. I'm getting kind of old to be bouncing in and out of positions like I used to do, and it can drive you out of your mind, really. So I decided, hey, you know what? I'm gonna take an easier route, a lot less volatility. I haven't had a single loss with regard to since I started selling options. And I'm very conservative too. I tell everyone what I'm doing. In my newsletter, I put out several strategies. I tell people, hey, this is how you can play it if you want to. But again, people need to reflect on themselves too. But going back to what we were talking about, absolutely, there are so many ways people can make the market work for them. Some of these are very, very simple. I'm a simple guy, and some of these are kind of convoluted and complicated. And I want people to avoid that. I want people to think about the easiest way to make this work for them. Because once you start getting into like all kinds of complicated trades and hedges and whatever, that's when stuff gets out of control and makes me even nervous. So stay simple, and I think we're all going to be okay. I think we know what to do. It's pretty easy. I'm sure people that follow your work have a very good handle as to what they should be doing here and why they're doing it. Why are we doing the things that we are doing? We're taking advantage of the current environment. We know what's going on about the debt inflating like we started off. We want to be hedged by holding hard assets, by holding cryptos. I tell people all the time, you must, or at least I believe, you should have some cryptocurrencies in your portfolio. I don't understand why some people refuse to understand it at all. They don't even want to. They think it's out of their wheelhouse, but it's really not. It's a very simple concept here. Here we have the opportunity by owning cryptocurrencies to have an asset that is not controlled by a central bank. You own it. It's not owed back to an issuing central bank plus interest that they create out of thin air. To me, sounds like a place to be. I don't know. That's just me.
Especially in crypto, I've seen a lot of fortunes lost with people trying to trade these stocks. I know there's a story of a young boy whose Robinhood account suggested that displayed that he lost $700,000 and he ended up committing suicide. Do you have any kind of stories of pain that you felt and how you maybe picked yourself up, and like what message do you have for people who are in a situation where maybe, I don't know if this is true. I'm in a bunch of Facebook trading groups. One guy had like a $47,000 loss and now had $200 in his account. And I believe these are young people on Robinhood. Like, what message do you have for these guys to like pick themselves up and like keep going?
Well, the number one rule people need to follow is never, ever play with a single dime that you cannot afford to lose. There is no such thing as a really as a get rich quick scheme. A lot of people jump into this market and they think, oh, you know what, I'm going to get in here and I'm going to make all kinds of money. The fact of the matter is, when people get into any aspect of the market, you're swimming with sharks. You're going to be in an environment that's very hostile to you. And there's always two sides of a trade. So let's say, you're getting in here and you're trading off of, let's say, headline news or something along those lines. You're probably going to end up taking a hit. Look, we all learn more from our failures than from our successes. I have made and continue to make errors. Hopefully keeping these to a minimum. When I first started getting into this, see, I got really lucky though. I mean, and this is part of the reason why I think I do what I do for a large degree. When I first started getting into the markets and trying to learn them, I kind of fell into a situation where I had people that were willing to help me learn what was going on. Just make the broad sketches for me. And then, you get in there and you figure it out for yourself. And the other thing with regard to trading or investing is you can get two guys, one sitting next to each other, and they're trying to make sense of what's going on here. And one guy is going to get it, one guy is not going to. So there are a few general rules that I follow. Number one, absolutely never invest or trade a single dime that you can't afford to lose. Number two, don't listen to anyone. Listen to your own intellect. Follow the data. It's not too hard. Find someone, let's say yourself, myself, that you're familiar with, that you can connect to. Okay, you know what? This guy, he's telling me a story and I can understand what he's saying. So that's a big one too. Try to find like a mentor if you could. I like to think in many ways that what I do, and I get this feedback from people all the time, well, Greg, you're like a mentor to me. I follow what you're doing and it makes sense to me. If you're following someone who's willing to teach you, and that's a gift, I think, in itself. As long as these people aren't like, oh, you got to do this for me. No. A lot of guys there's a lot of guys like yourself, myself, are out here trying to make a difference. And I think that's what it's really, really all about. So find a mentor, someone that you can trust, that you believe in. Never invest with any money or trade any money you can't afford to lose. And never stop learning. For example, me, I follow the markets around the freaking clock. I know it's insane, but I feel like it's important for me, especially because I have a reasonably large audience. I want to give people information that is correct and that they can act on. And it really gets under my skin when you got like a really big guy, let's say Jim Cramer, okay, out recently calling a top in crude oil, which was ridiculous. He has a massive following there, and he's steering people in the wrong direction. Obviously we surpassed his we pulled back a little bit, we surpassed his so-called top. Crude's going much, much higher. But again, I think the general rules with trading are, don't, like I said already, never stop learning. Don't play with money you can't afford to lose. And people are going to do this no matter what you tell them. People are going to go out there and sell their car or take a mortgage against their house just to participate in the market. We have margin debt today in the stock market, or money that's borrowed. People are borrowing to participate in the market at all-time record high. So when this thing does roll over, a lot of people are going to get hurt badly. It's a really crazy situation. Never get into anything at all that you don't fully understand. And although the markets seem like they're very complicated, they're really not. Just understanding where cash is moving is a big key here. And how do we gauge that? It's very simple in my view. Okay, you look at the debt market, which is the backbone of the financial markets. Okay, the debt market, more specifically the 10-year yield, which is the benchmark. Every trader that I know, from going back till I started back in the 80s through till today, follows that 10-year yield. You can look at the whole darn yield curve, sure, but you can glean a lot of information just by watching that 10-year yield. Right now, we're about 1.60, 1.61. If we have a situation where rates are suppressed, like they've been since the last meltdown, well, what does that do? It creates a deliberate environment of risk. In other words, cash making its way over into the stock market, inflating a bubble. That bubble in the stock market, which we have, I think it's the largest in history right now, is being fueled by the debt market. So if we understand that mechanism, and we also know the debt's going to continue to inflate, what does that tell us? Where do we want to be? We want to be, again, in equities and hedging ourselves longer run with metals and cryptocurrencies. It's very, very simple. That's really what it boils down to me, is understanding the flow of money. Where is it going? And then what are the institutions doing? See, look, maybe I have a little bit of an insider view into this market because I talk to everybody. I talk to everybody. This little device here that we all seem to have, it's become a real asset to me. As I've gotten more well-known, more people are willing to talk to me. And so I know these people. So I hear things and I share this openly with everyone who follows my work. So I think that's important too. Not that I ever act on inside information. I really don't. I don't trade. I've been accused of that, but I even got in trouble with the SEC not too long ago, about last year. They were looking into some of my work that I was doing, but they can look at whatever they want to. Anyway, long story short, I think that lays the groundwork for people. Just never get into anything that you don't fully understand. I have admittedly over the years lost huge sums of money in the market. And that's how you learn. Why did that trade go bad for me? What did I do wrong? And try to analyze it and say, you know what, I'm not going to make that mistake again. But what ends up happening, even to guys like me, is you do repeat the same mistakes a lot of time. It's very difficult to stay level-headed and focused in the markets. I think if you have money at risk that you can't afford to lose, and that's the biggest I think deterrent to people who want to trade this market to becoming successful. Don't ever just throw money at this market not understanding what you're doing.
I remember in 2011, as silver reached the top, when I was working on the retail level, a gentleman had bought a lot at $49, so much so that his wife noticed that silver then began to topple, and he came in and was really trying to get us to buy back the silver at the $49 price point. It was now at $42. I was like 22 at the time, and that was etched into my memory. Recently, as Elon Musk talked very favorably of Dogecoin, I believe a lot of people went into Dogecoin ahead of the Saturday Night Live appearance, and they ended up losing a lot of that money. And I've learned also that many of them don't even understand that Dogecoin has an infinite amount of coins that can be minted or mined, whereas Bitcoin has a cap. People have told me that they didn't even know that. So that speaks to, don't invest in things that you don't understand.
Yeah.
So over the years, what have you learned about the sharks that you mentioned?
Well, look, what is this here? The business of trading, the business of even investing is it's dangerous because there are people there that have a higher level of knowledge. So you want to have that same, in order to compete in anything, whether it's sports or this is a competitive environment, the market. So there's one guy on one side of the trade and there's another guy on another side of the trade. If someone's going long or buying a particular asset, there's a guy on the other side who's selling it. Okay. So, obviously one of these people are going to get the trade correct. So you just want to make, and we're, like I said earlier, we're not always going to be right. But if we can stay right for the most part, and we're, like I said, we're all going to make mistakes from time to time, and it depends on your level of risk too. Me, I have turned into an extremely conservative trader and investor over the last few years. I really have. I've changed my whole entire, I used to be extremely aggressive, and the swings in my portfolio were frankly staggering. Like I would be up or down $40,000, $50,000 in a day. And I said, this is crazy. I can't function at this level anymore. So then that's when I started switching up and say, okay, you know what, instead of, buying options, I'm going to start selling these things. It's a lot more stable, steady gains moving forward here. You do have to have a certain level of sophistication and a certain amount of capital in your account, a certain trading level to be able to sell options or set up credit spreads and stuff like that. But that's the way to go. That's what people should be striving for. But understand, in any kind of an environment, whether it's the stock market or whatever it might be, you're entering a realm that has danger and risk. And that risk is what makes people money or causes them to lose. But again, going back to what we were just saying, having a clear understanding of what you are putting your money to work in really will make a difference to you. You got to understand it. There were a lot of people that were jumping on the bandwagon, like you mentioned earlier, and they got hurt. Okay, I never do that. Never. I never do that. Would I have done it maybe back in the day? Maybe. But right now, no. Sure, you can speculate wildly on anything, but again, you better be doing that with cash that you can afford to lose, because it may go the wrong way. There seems to be a lot of people here who are again, and there's nothing wrong with looking for a way to get rich quick, but the best way to do it is slowly and methodically. Attack the situation very strategically. This is what I want, and how am I going to get there? And I'll tell you a big part of it. A big part of attaining goals in life, and it's not just with the market, is having the right mindset, is understanding that having yourself understand that this is what I want will cause you to move that way. The power of, I guess, believing in yourself is huge. But again, not doing this in a reckless manner. Say, this is what I want. How am I going to get there? Right now, I don't have the means, but I'm going to get it. And convince yourself that that's the way it's going to go. And it will. It will eventually work out that way, I believe. So again, it's not just a matter of understanding the mathematics behind this entire thing. It's also a mental attitude, being in such a mindset that you want that success. And at the same time, I believe this, and I don't know how many other people are going to think I'm out of my mind for saying this, but you got to pay it forward. If you're doing well in life, or you're successful, I tell people, take a little fraction of whatever you have a trade, you made X amount of dollars, take a little bit of that, donate that to a charity that you believe in. By paying it forward, I don't know, maybe it's the universe that's just kind of being good to you. That is a factor too, in my view. I really believe that. I know it may sound a little far-fetched, but it works for me, and that's what I'm going to continue doing. I want people to do the same.
I think there's many places outside of Manhattan where it doesn't seem as far-fetched as it might in Manhattan. So I'm going to read a quote from Cameron and Tyler Winklevoss from Bitcoin 2021 in Miami, which is a great conference that I suggest you consider going to, which is happening in April. It was electric in many ways. Tyler particularly said, Bitcoin is gold 2.0. It will disrupt gold. So its market cap has to be 10 trillion or more, because that's the market cap of gold. Bitcoin's hovering around 1 trillion now. It's at least conservatively a 10x from here. Even at $35,000, it feels like a really good buying opportunity long-term, because at a $10 trillion market cap, one Bitcoin will be worth $500,000. That could happen inside of this decade. So we're hodlers at least until 500,000. And then at that point, you won't even have to sell because you can borrow off of it or whatever. His brother Cameron agrees, quote, we're like 1/12 of the way there. And when we wrote that thought piece in August 2020, Bitcoin was at $13,000. It hit $64,000. The story is really just playing out. It's just getting started. The Winklevoss gold thesis postulates Bitcoin is in the process of disrupting the gold market. And they say that it's the conservative bull case. Quote from Tyler, obviously, Bitcoin's a lot more than gold. It's an open source project that continues to evolve and can do so much more. It can become the global reserve digital currency of the world, of the galaxy. When we get to Mars, what's the currency going to be? Is it going to be dollars? No, it's going to be Bitcoin. All right, so they really took off there at the end and went kind of haywire. But now the thesis is Bitcoin is gold 2.0, and therefore it must reach at least a $10 trillion market cap, which is gold. Do you agree with that?
The price target, look, this is how I look at this. I understand the current environment remains risk on. Okay. When this flips to risk off, meaning cash is going to leave, how this is going to happen is very, very simple. All right. I want people to understand this, and keeping it is as easy as can be. Right now, we have suppressed rates now since the last meltdown here. This has caused massive distortions, massive epic distortions across the spectrum of asset classes here. Cash is moving into things it should not be going into, and out of things it should be going into, coming out of, back and forth. It's crazy. So understanding that the current environment is going to flip over. I mean, markets run in cycles, risk on, risk off, risk on, risk off. I consider Bitcoin, cryptocurrencies really risk off, and look how they're performing right now. So what's going to end up happening here, we're going to get an implosion in that market, meaning you're going to see rates spike in an uncontrolled fashion. Okay, and it's not going to happen by accident. It's going to be something that's going to be set in motion here, because we have a debt market in a hyper bubble, and everyone I think realizes that, which has inflated the stock market bubble. So how's this going to work out? We're going to get a spike here in the debt market. The 10-year yield is going to start skyrocketing at one point here. That's going to put a lot of pressure on the stock market. Stock's going to sell off. So you're going to have cash leaving the debt market, cash leaving the stock market. It's simply going to look for places to go. In my view, I've never wavered from this. It's going to make its way into commodities, gold and silver, like crude oil, other commodities as well, hard assets, and it's going to make its way into cryptocurrencies. So where's the top? I have no idea. I really don't know. I don't like putting a number on it because I just want to see how it's going to play out, because what's going to happen there too. We're going to get an over correction here, or an over meltdown. I don't know how you want to put this in the stock market. The stock market is going to crater to a point when the debt market melts down that I think is going to be a mind blower to people. They're not even going to. And it's going to overcorrect. What I'm saying is it's going to go lower than its actual fair value. Companies have value. Okay. These companies that make products on a worldwide basis here, they have value, but they're going to become undervalued at one point. So there's going to be a buying opportunity on an epic scale. So how I plan on playing this year, looking at Bitcoin, cryptos, gold, silver, and waiting for that moment here. So everything's going to kind of flip around. Risk on becomes risk off. Assets like cryptos and gold and silver, in my belief, are going to skyrocket. Crude oil, I think, is going to skyrocket. Like, we're seeing an incredible surge, but this is nothing compared to where this is going to go at one particular time. And then we're just going to reallocate cash again. We're just going to flip it back. So whatever this thing is at the height, and no one's going to be able to tell us exactly where we are, but when we see certain things fall into place, we'll be able to tell when I think it has bottomed out or topped out, depending on which assets you're looking at. I mean, no one's going to nail it down to exact dollar figures, but we can get relatively close, and then we're going to just reallocate our funds again. And it's just a never-ending cycle. That's how markets work. That's just how they work. And understanding the basic premise of how they do work puts us light years ahead of everybody else. And that's where I want to be. And that's where I want people that follow my work, and I'm sure the people who follow your work, want to be too. They want to be light years ahead of everyone else. And I think we are. I think cryptos, as you had just said, are undervalued right now, massively. And I think people are going to be shocked at one particular time at whatever the top may be when it comes to the price of cryptocurrencies, or even gold and silver for that matter. Based on global debt that is continuing to be fueled, it's a monster. It's an epic monster. We can only, again, speculate what the tops may be, but I think it's going to be higher than most people can probably even realize at this particular time. It's going to be pretty shocking.
What kind of indicators are you going to be looking at when you start thinking that maybe things get a little top heavy?
Well, you mean with regard to what? Cryptos, markets, all that stuff?
Markets.
Well, the market, look, the market right now is in la la land. It's already way, way top heavy. It's in a bubble. It's a hyper bubble, and it's going to get bigger. Suppressed rates, easy money. The Fed right now, fulfilling their end game, buying it all, becoming the lender and buyer of last resort, becoming the world government in many, many ways. This has been their goal since forever. So they're going to hyperinflate this market. We're watching a massive wealth transfer occur from one group of people to another. We're watching an elimination of entire class of people, the middle class, something I said would happen from a decade ago. And that's exactly where we are now today. And it's going to get a lot worse. It's the golden age, in my view, for those people that are well off and already rich. And if you're struggling to get there, pay attention to shows like this, because it's telling you the right spots to be in my opinion. And if it makes sense to you, what we're saying, what you and I are talking about, then, do a little more research. Hey, you know what these guys were talking about makes sense to me. Maybe I should look a little more into it. But we're going to see these distortions that exist in the market get even worse. And I think a lot worse. And I'm going to be keeping my eye on the action, the debt market. The debt market is the driver of everything that's going on. As a matter of fact, you can think of the entire stock market and markets as a whole are deriving value as to what is occurring in the debt market. So everything in many ways is a derivative as to what is occurring in the debt market. The debt market is setting the stage for the price action of most assets. In fact, probably all of them at this particular time. So when we do get a correction or an implosion in the debt market, which is going to occur, don't know when, I don't even think about it. we're going to see everything kind of overcorrect, like I was saying before here, a massive sell-off in the stock market, a vaulting higher of commodity prices here, cryptocurrencies going monumentally higher. And then that'll just flip back. But there's an indicator actually I had come up with just several weeks ago. I just published it. It's free. It's 100% free to anyone who wants to look at it. It's called the MMRI, Mannarino Market Risk Indicator. You can find this right on my website, traderschoice.net. It basically is an indicator talking about relative risk in the market, relative because it's taking what's happening, the action in the debt market, using an equation involving the dollar or the Dixie, the relative value of the dollar, and the 10-year yield, putting this together in an equation to gauge risk. Right now, we are still in a relatively low risk environment. We're at the high end of low risk, but we're still low risk. So you're going to see more cash flowing into the stock market according to that indicator, and I think it's true. And as long as crude oil continues to get propped up like it is, crude oil is a key element to the stock market itself. And it's going to continue to get propped up here. I think we're going to easily see $90 a barrel, 92, 93 relatively soon, probably going over $100 a barrel would not surprise me. Most Wall Street banks have a $100 target on crude right now. And I think we're going to hit it with relative ease. And as that mechanism boosts the entire energy sector, it gives the financials a boost, it sucks the whole market up with it. That's the way cash moves. That's the mechanism here. So let's all take advantage of these things. So watch these indicators like the Mannarino Market Risk Indicator. Watch the flow of cash. Look at the relative dollar value, the 10-year yield, the action of central banks. What are they doing? Not what they're saying, because we're hearing all this talk about taper, 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 taper. Follow the economic news, understand that our economy as a percentage of GDP and debt is cratering. And this is why we continue to get bad economic news. And that mechanism is going to also push stocks higher. Nothing is what it seems. And usually by following the crowd, you're going to end up being wrong with regard to investing and or trading. And that's why I tell people, it used to get me too, believe it or not. I used to follow a lot of people myself. It's like, what is this guy saying? What is this guy saying? Blah, blah, blah. And it would play with my mind because I'd be looking at the data myself and saying, well, hold on a minute. This doesn't really make sense to me. So I started to get a little confused years and years and years ago. Now, I don't do it at all. I don't follow anybody. I follow my own data. What is the data telling me? What am I looking at? What is it telling me? Not just what this guy saying, or is that guy saying? And since I've done that, I think I've really been able to keep myself and the people that follow my work on the right side of this whole thing moving forward. So follow your own intellect, do your own homework, and I think you're going to be okay.
How have you learned to manage the data over time? Because there's always this question of data sets and statistics or data research. And I think that I find that a lot of people, they're mostly looking at too little data, not necessarily with the markets, but in general, there's this obsession these days with data and data science. And I think that a lot of kind of amateur data scientists, they look at a little bit of data, which is a small sample size and maybe not betokening of any trend or anything. And I imagine that unless you have the right computers, that you can also have too much data. So how have you learned to manage the data?
Well, absolutely. A paralysis of analysis. You can get over, if you get bombarded with too much stuff. Number one is just be aware. Okay. Be aware of what's going on. Follow what's happening here. Listen to the garbage, honestly, that is being spewed out from the mainstream media and the numbers that they're throwing at us. And we know for the most part, all these numbers are fake. Look around you. Look, how are people doing that you actually know? Is everyone thriving? Is everyone doing fantastic? That's a big part of it, is using, like I said, using your own intellect. Where I think people, if just by immersing themselves in a particular environment, for example, for me, all right, I'm up here, I'm following the markets all the time, watching the flow of cash like we were just talking about. What is that telling me? If I see cash moving in a particular way, okay, this tells me there's something pushing it there. Obviously, we know the main driver here remains the Federal Reserve, and they're going to continue doing this despite a taper or not here. But you can look at the numbers that the government is giving us, and it's all garbage, and realizing that the numbers they're letting us know about are probably vastly worse than they actually are. And that's another thing here with regard to a lot of the data that we get. For example, we're in earnings season now. We're going to hear from the banks this week. They're starting to report. None of that even matters anymore when you have the main driver of the market being the Fed. So we trade the environment. Look at the data; it's very important. Okay, but watching the flow of cash. Where is it moving? And you can tell this again, looking at action in the debt market, looking at the credit market. Credit market. What do I mean? Are banks lending money to people? Are banks lending money to each other? What's going on with regard to businesses? Are they getting loans here? That's a big part of it too. So right now we have credit flowing, we have debt flowing. This is an environment very conducive to a stock market that's more than likely going to hit new record highs relatively soon. Once we get through this rough patch, these last 2 months have been historically rough on the market. Okay, we haven't really done too much in a while in this market. And I think once we get through this end of this month here, and there's a lot of people calling for a crash this month, one guy in particular, I'm not mentioning his name. Once we get through this month, I think the market's going to start moving higher, faster. Even if the Fed, does a token taper, what are they going to do? Their goal is to buy assets. That's their end game here. And they have minimum targets every month as to what they're going to buy. So what are they going to do? Raise these targets, lower these targets, mess around with numbers. And this is just what they're letting us know they're doing here. They could say whatever they want to, but watching how cash is moving through the markets is the key. All right, where's it going? And understanding where it's going, and it's very simple to see. Look at, like I said, the debt market, credit market, stock market itself. Main driver here is obviously the debt market. We can have a very, very good idea as to where the markets are going to go until they stop. And we're going to get a big key or big clue when we see, let's see the 10-year yield spiking. And it's going to happen. It's going to happen. I just don't know when, and I don't care when. So we just got to keep our eye on it. That's it.
Certain people in the precious metals industry claim that gold and particularly silver here is not a manipulated market, that some of the cases we've seen are just isolated incidences. Can you kind of lay out the case for precious metals or silver in particular being a rigged market?
Everybody knows this is true. I don't know anyone on or off Wall Street that has even the slightest clue or realizes what's going on here, that the hard asset price is being pulled every which way by the derivative. It's an upside down market. Sometimes we have, paper, silver or gold dumped onto the market in one day more than they mine in an entire year. It's absurd. We don't have, it's crazy. When people see the price of gold or silver fluctuating, is this actual gold or silver that's changing hands now? We're talking about the paper market. And that can be pulled in any direction they want it to go. I mean, it's a crazy situation. But like I said, I've written to everyone about. I've written to the Commodities Exchange, the SEC. Look at these banks. J.P. Morgan got caught how many times rigging not just the silver or gold market, but everything. They just paid like a ridiculously low, like $15 million fine for being caught rigging the treasuries market, the futures market. It's utterly insane. And that manipulation is going to continue. They're going to continue to suppress these prices. These banks, they don't want people, obviously, in Bitcoin. We heard Jamie Dimon, was it yesterday, saying Bitcoin is worthless. Of course, guys who run a bank don't want you in gold. They don't want you in silver. They don't want you in cryptocurrencies. They want you in their product, the dollar. They want to. Oh, sure, they're more than willing to lend you as many dollars as you possibly want, but forget about Bitcoin, forget about gold or silver. Oh, no. Nah, the metals market is I think it's more rigged than any other one. So is crude oil, though. Crude oil is, to me, right now is just as rigged, and I think it has no bearing on reality. I've been explaining this to people for a very, very long time. As a matter of fact, there's no aspect of this market really that has a price discovery mechanism behind it anymore. It's all just twisted. It's rigged. Cash is moving around in places where it shouldn't go, and it's very scary to think about how extreme these are. But that means there's opportunity as well. If we realize that things are not normal, that things are distorted, well, that gives us a chance to take advantage of it. And that's really what this comes down to for me. And I think for most people, what can I do? What can I do? What should I be doing moving forward? If you understand that we're in a debt hyper bubble, where do you want to be? You want to be in a unit of debt, or do you want to be in a unit of wealth? Okay, unit of wealth being physical gold, physical silver, and in my view, cryptocurrencies are also a unit of wealth. So because you own them, that's the difference, I think, between people that are well off or rich and people that are not. People borrow their way through life. They walk around with a horrible debt burden. That doesn't make you wealthy or rich. That makes you you become a slave to servicing the debt that you owe. And unfortunately, that mechanism is getting worse and worse. We have consumer debt, personal debt at record highs, and it continues to grow. It's out of control. People trying to, make ends meet, just borrowing. People trying to claw themselves into, the higher rung, maybe from the lower class to the middle class, or the middle class to the upper rung, and they're just doing it about it the wrong way. You got to own things. Owning things is what sets people apart here. And most people, honestly, that are considered rich or well off, they don't have a lot of cash laying around. They have their cash either invested in things, or they got they're putting their cash to work by owning things, like whatever it might be. It's kind of interesting, if you think about it. You look at people that have a lot of net worth here, they probably are cash poor. They probably don't have too much cash laying around because they have it working somewhere. And that's just what people need to do. Find places to get whatever cash you have to work. Because right now, the dollar is a dying asset. I mean, look around us. We have surging inflation. We've never seen it rising at this pace before in the history of the world. And just today, we heard from the vice chair of the Fed saying, oh, it's still transitory. Really? We've been hearing that for a while, huh? No, it's not transitory. It's structural, and it's toxic, and it's going to get much worse in my view.
For those who don't understand what's going on, they are living in the present, while the rest of us know that, for instance, in 6 months, it's going to be announced, this is 6 months ago, that in fact, inflation is not transitory. And it seems like over and over again, we're like, no, this is in 6 months, they're going to say, oh, it's here to stay. And this is on pretty much every single kind of sector of society in which you can kind of look ahead and anticipate what's going to happen. So how do you see perhaps the precious metals rigging unraveling, if at all?
I think eventually, like every other asset, it will reach a fair value. But again, and when I think we're not going to see any real big movement with regard to precious metals until we get the meltdown in the debt market, like I was explaining earlier. Our cash is going to start moving very, very rapidly into other assets once it starts bleeding out of the debt market, bleeding out of the stock market. I think it's going to be a bloodbath on a scale that we've never seen before. I really, really do, because the market is just so distorted right now. So it's just in the same way it's in a hyper bubble, it's going to turn into a very, very bad meltdown, much, much worse than the last time. And yeah, and then it goes beyond that too, because it's not just a matter of, because I had made reference to the debt market and the credit market earlier. Well, most people don't understand, when we had the meltdown last time, it really wasn't so much what was occurring really with regard to housing and the stock market, but it was the fact that credit started to freeze. Credit was locking up. People, you couldn't have money to have their businesses function. If we get into a moment here where we get a credit freeze, and I think it's going to happen, there's going to be no cash to be had at all. You're going to go run over to your ATM. It says I have X amount of dollars in my account. I can't get anything out. I think that the prospect of a debt or credit freeze is going to be epic, absolutely epic, and people are going to be running, scrambling around. What am I going to do? What am I going to do? This is why I tell people, you gotta embrace the fact that we need to come together as a people. Don't let these people divide us, because that's what they want to do. We're not each other's enemies. They want us divided. They want us dependent on them. And this is how the few have ruled the many since time immemorial. Look at what they're doing today. They're taking away free thought. You're not allowed to think for yourself, free action, free movement. All the stuff that this country was founded on, it doesn't even exist anymore. The markets they have no free market. We have no free market economy anymore whatsoever. But again, that's it. My biggest fear is not so much what the market is going to do, but I think if we end up in a situation where we have a credit freeze, where there's no cash to be had, people are going to go into absolute panic mode. That's really what was going on. That was the reason behind the capital injections into the market last time. It wasn't about really freeing up the markets. It was about freeing up credit, so money would start to flow again and people could transact. I think that's what people, I can't go to the store. My ATM isn't working. My debit card doesn't work. What are people going to do? They're going to go nuts. So that's the biggest issue. If someone was going to keep me up at night, that would be it. not really so much what the markets are going to do. And if you have yourself, like I said earlier, when we first started, if you have yourself hedged, you're sitting pretty. You're sitting pretty right now by being in the market on the long end until we can't, and then being hedged by having anti-debt units in your portfolio. You're okay.
We've had the honor of sitting down today with Gregory Mannarino of traderschoice.net. Thank you so much, Gregory, for sitting down with us today. And thank you, everyone, for joining us.
Thanks for having me. Let's do it again.
What's up, everyone? I hope you enjoyed the show. Head on over to GoldSilverBitcoin.com for more content like this, as well as long-form written articles about precious metals, Bitcoin, and other topics. Also, check out our shop where you can get precious metals, storable foods, and all sorts of other cool survival and prep gear as well.